I honestly wish personal finance came with a guidebook that tells you exactly what to do at every stage of life. But the reality is, there rarely is a one-size-fits-all answer. With my new home finally settled, the next decision I have to make is whether I'll be using cash, CPF, or a combination of both for my monthly mortgage. And the more I thought about it, the more I realized that this decision isn't just about the monthly repayments, it'll also eventually influence how I continue investing and build wealth over the years ahead. So in today's video, I'll walk you through the strategy that I've decided on, the trade-offs I considered, and why I think this is the best fit for my own financial goals. Without further ado, let's dive right in. Let's go. For those of you who are new here and have not caught prior videos of me documenting the home buying journey, I'll leave that playlist link down in the description box below. I've only recently finalized the mortgage package with the bank, and my monthly repayment sum is $3,698. Every single month, I will have three options. I can pay it entirely in cash, entirely using CPF if I have monies in my OA, or use a combination of both. But just an upfront disclaimer, I've already wiped out my CPF OA monies for the home down payment. So for my current situation, I'm an employee of my own company and I draw a monthly salary of $8,500. After accounting for both the employer and employee contributions, about $1,840 will go into my CPF ordinary account every single month. So money in OA, if you do not know, currently earns 2.5% per annum. And here's the question that I've been asking myself. Should I pay the full $3,698 in cash and leave my CPF OA untouched to continue earning that 2.5% per annum, or do I use half-half? $1,840 that's coming into my CPF OA every single month towards my mortgage and supplement the remaining amount in cash. At first I thought it was a really straightforward decision, but the more I thought about opportunity cost, it suddenly became a little bit more interesting. So scenario 1, I pay the full mortgage in cash. This is honestly the simpler option because I don't have to think about doing anything extra with my money. So every single month, money that flows into my CPF OA stays there and continues earning that 2.5% per annum. I don't have to make any additional investing decisions because CPF is already compounding on its own. But scenario 2 is I use a combination of both cash and CPF, where instead of letting that $1,840 remain in my CPF OA, I use it towards my monthly mortgage repayment. That means I now have an extra $1,840 in cash every single month that would otherwise go into my mortgage repayment if I had chose scenario 1. But then the question becomes, what do I do with this amount of extra cash? If I simply let it sit in a high-yield savings account right now in today's interest rates, then I'm probably worse off than just leaving money in my CPF ordinary account. That was the thought process that went through my mind. So choosing this option only makes sense if I can actually commit to consistently investing that $1,840 every single month and reasonably expect it to generate a sum that's higher than CPF OA's 2.5% per annum. So what did I end up choosing? A guaranteed 2.5% per annum is honestly a good return. I could treat it like a bond and just choose the easy way out per se. But at 30 years old, I still have a long investment horizon ahead of me and I'm comfortable taking on a little bit more risk for the opportunity to earn a higher return over a long period of time. And that's why I decided to use the monthly CPF contributions towards my mortgage and intentionally invest the equivalent in cash into my Singapore dividend portfolio. The goal is for the investments to generate a return that's higher than CPF OA's 2.5% over a long period of time. Of course, I know that eventually when I sell my home, I have to refund CPF OA monies that I've used and the accrued interest. And that's an important consideration and something that I have taken into account into my planning. And the reason I say that is because I genuinely can see myself living in this home for a long time. Even if I eventually have a partner, I get married, I settle down, I still think I can comfortably see us growing in this apartment together. But truly what excites me the most about this decision is that I'll add another layer into my investing strategy, because up until today, I've never dollar cost averaged into the Singapore stock market every month. I've built my dividend portfolio over the years in my Moomoo account, but if I'm being honest, I've invested quite sporadically to build the portfolio to what it is today. I'll share an update on this portfolio with you guys a little bit later, but just last week when I attended Moomoo Fest 2026, a full-day event organized by Moomoo Singapore where investors of all experience levels came together to learn, share ideas, and hear from industry experts. One of the highlights was the launch of Moomoo AI Expert Mode, an upgraded version of the existing Moomoo AI. And since I'm going to be consistently growing my Singapore stock portfolio every single month, I've been exploring how it can fit into my investment process. Personally, I use Moomoo AI to stay up to date with news that's relevant to my holdings, summarize market developments, and analyze companies that I'm researching. On Expert Mode, I like how it can review my portfolio and give me a quick summary of what's happening, which saves me quite a bit of time. It also comes with interactive real-time charts, so I can ask follow-up questions while looking at the company's price movements. If I'm deciding between two companies, I can compare them side by side, have the AI break down the key differences, making my research process much quicker. One feature that I thought was really cool was that if I decided I want to make a trade, I can actually ask Moomoo AI Expert Mode to prepare an order for me at a specific price and quantity. It will automatically prepare the order ticket for me. All I need to do is to review everything before deciding whether to proceed. If you're looking for inspiration on where to start, you can also check out Moomoo's Insights page. It tracks the holdings of well-known investors and major institutions, lets you see industries they are investing into, review portfolio weightings and its historical changes, and even subscribe to real-time alerts whenever they rebalance their portfolio. Of course, I don't think AI should ever replace your own judgment or the investment decisions that you make for yourself. But I do think that it can save you a lot of time in gathering information, making it easier to stay informed and continue learning as an investor. If you'd like to get started with Moomoo, I do have an exclusive new user promotion. You can simply use the link in the description box below and enter my code Demi88. You receive welcome rewards worth up to $1,200 with exclusive NVIDIA share rewards through my link. I'll leave more details down in the description box below. On a side note, if you haven't heard the news that from 5th October this year, investors will be able to buy Singapore listed stocks in lots of 10 shares instead of the usual 100 shares for eligible counters that are trading above 10 Singapore dollars. I genuinely think that this is a huge step in making investing much more accessible, because take DBS for example. At today's prices, buying the usual 100 shares would require over $7,000 upfront, and that's simply not realistic for many people who are just starting out. Yes, you can technically place odd lot orders, but they often come with the wider bid-ask spreads, which means that you end up buying at less favorable prices. Being able to invest in smaller quantities just lowers that barrier significantly, and I'm excited for it. So where does my dividend portfolio stand today? This is a snapshot of my entire portfolio on Moomoo's platform, and because I needed additional cash for my home down payment, I actually made the decision to liquidate part of my portfolio. As a result, my projected annual dividends have fallen from $9,234 to $7,880. Was I happy about it? Of course not. But I also knew that this was the trade-off that I was willing to make. For me, buying what I hoped to be my forever home at that point in time was my top priority, while still making sure that I kept majority of my investment portfolio intact. And now comes the exciting part. So over the next few years, I'll be rebuilding this portfolio 1 month at a time, and who knows, maybe one day it'll grow to a point where the dividends can cover a meaningful portion of my monthly mortgage repayments. Wouldn't that be nice? For monthly updates on what I'm investing in, subscribe, follow along, because the investing part of Money Diaries is finally coming back. I've stopped for a while because I was saving for my home down payment, but now that this is finally over, I'm going to start investing into the stock market all over again. And I think this is the part of personal finance that I enjoy the most, because life changes, your priorities will change along with it, and your financial strategy should also evolve with it. The goal isn't to follow someone else's blueprint, not mine, not your friends, not your family. It is to build a system that supports the life that you actually want to live. So this mortgage strategy is simply the one that makes the most sense for me today. After a few years from now, it might look completely different, and that is okay as well. If you have a different way of doing it for yourself, please also let me know in the comment section below, because I'm relatively new to this and I'm all ears. So as always, I'll continue documenting this journey, sharing both the wins and the mistakes along the way so we can all learn from it together. If you've ever found any of my videos useful or you just enjoy it, found it entertaining, I'd appreciate if you could give me a like, subscribe to the channel and follow along on this journey. It genuinely helps more than you know. Thank you so much for watching, and as always, have a great week ahead. I'll catch you guys in my next video. Bye bye.